It's been very shaky ground for homeowners insurers in the recent past. So much so that AM Best has revised its outlook on the key segment to negative. Here to discuss the rationale behind the move is Maurice Thomas, Senior Financial Analyst, AM Best. And Maurice, what was the basis for the change?
Well, John, the revised outlook for the homeowners segment reflects several ongoing challenges that have dampened underwriting results in recent years. What we've seen is sort of a double whammy effect. Carriers have actually already been contending with headwinds such as above-average catastrophe activity, inflationary pressures, and elevated reinsurance costs. Now, segment carriers are being further challenged by more frequent secondary weather perils and higher retentions and co-participation levels given reinsurance pricing trends. In 2022, the segment incurred a net underwriting loss for a third consecutive year, with inflation causing underwriting expenses and loss adjustment expenses to rise to a 5-year high. Calendar year 2023 has already been highlighted by losses from Hurricane Idalia, the Hawaii wildfire disaster, atmospheric rivers in California, severe convective storms across several southern U.S. states, and flooding rains in the Northeast. However, we do expect that there is a silver lining, and I'll probably kind of jump to this as far as offsetting factors. Risk-adjusted capitalization for many carriers remains solid with sufficient liquidity, but the capital cushion is starting to erode. In response, many carriers are starting to push rate to address rate adequacy through both rate increases and rate inflation adjustments. However, as companies continue to increase their reinsurance retention, co-participation levels due to the reinsurance market conditions, CAT activity is having a larger negative impact on the bottom line. As a result, many carriers will find it difficult to absorb these underwriting pressures while strengthening their balance sheets. While the homeowner segment continues to face many challenges, it's imperative that segment carriers maintain their focus on rate adequacy, technology adoption, and catastrophe risk management. Collectively, these efforts may provide a path of earning stability going forward.
What does AM Best expect from the segment for the remainder of the year?
CAT losses are expected to remain above normal for the rest of 2023. Based on what we've seen so far, a return to underwriting profitability over the near term is highly unlikely.
Are there any strategies insurers can employ to offset this?
Yes. As I said earlier, pricing needs are addressed through rate adequacy. They're pushing rate, in addition to catastrophe risk mitigation strategies, as well as technology adoption. So all of those things collectively will help to manage that volatility going forward. However, for many carriers, it's been a challenge because there are always budgetary constraints that will mitigate those types of efforts.
Thanks, Maurice. That was Senior Financial Analyst Maurice Thomas. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.